Welcome to Bears in Exile. Today is Sunday, April 1st, and this is the weekend market overview. Looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, SLV, CompQ, GE, Apple, and XLF, and VXX. Okay. Well, Friday wasn't exactly what we were hoping for. At least it's not what I was hoping for. I was expecting weakness through the end of the week, and with a possible melt into of weakness into Monday and Tuesday. Instead, we had strength on Friday, and we were expecting strength in the morning, but it just kept going. And actually, I'm going to show you that here in just a moment. Beyond this, what are we looking at? Well, we have some positive things for the bears, but it is mixed. We have these two previous highs that should offer some resistance to this up move, and that isn't much to go off of, but that is a little bit of encouraging news or positioning. Beyond that, we have the 14-day RSI moving average ticking down. We have the stochastics, the slow going south, the fast going sideways. CCI up, RSI slightly up, MACD histogram up, and MACD itself going sideways. So mixed picture, but the 14-day is encouraging. The possibility of the stochastics turning over is also encouraging. If we look at the 60-minute time frame, we can see what we were talking about on Thursday. We were expecting to move up in the morning on Friday, and we did get it. But instead of it turning over, it finished its big move up, and then it just kind of floated, and volume just went away. And the normal normal chain of events for this market: no volume, and it melts up. Beyond that, how about that carryover into Monday and Tuesday? Well, as it turns out, thanks to this melt up, we are in a pretty good position in the 60-minute time frame for some more downside Monday and Tuesday. CCI very high, turning over. Stochastics very high, attempting to turn over. RSI high, turning over. MACD histogram starting to slope down. MACD still up, and the 14-day turning up. So there are two parts that are not good, but overall, not too shabby. We can see the excessive separation in the 60-minute time frame and those lower peaks. Now, if it's able to bust out of both of these, certainly that'll be extremely bullish. So something to be watching out for. SPX, ending with a fat body, spinning top, indecision. 14-day ticking up. Not exactly what we want to see, but stochastics pointing down, CCI ticking up, RSI ticking up, MACD histogram ticking down, MACD ticking down, and we only have one, previous high to work ourselves through. Some people might think or see a possibility for a head and shoulders should we get high enough. Certainly that's possible. The only thing I don't like about that is there's so little room. I mean, to get the head and shoulders, you'll need to get over this high and just shy of this high. Certainly it can be done, but it'll be really close if that's the case. 60-minute time frame, the strength we were expecting, and the little melt up that we're doing on no volume. Similar to the Dow, we have the stochastics ready to turn over, the CCI, the RSI, the histogram sloping down, and the MACD itself ticking up, and a slight tick up on the 14-day RSI moving average. We want to see all of these run to the bottom and meet the 14-day, possibly even turning it down. But that may not happen, in which case it will turn up. And if these are able to run to the bottom, it'll just help mute the down move. And that's okay too. I mean, just taking back half or even attempting a break of the floor from Thursday, Friday would be entirely wonderful. If that were to happen to be tested and broken, we have a previous low just below that, which isn't far away, and beyond that, plenty of room to move to the downside, which would be awesome, which would be about 1366 and 1340. Moving on to, and you can see how close this is if we were going to get a head and shoulders. So see, there just isn't very much room. That's the only thing I don't like about that. So anyways, moving on. Comp Q, the NASDAQ. And this one has been the strongest for a long time, and on Friday it was the weakest, which is pretty cool. We still have not resolved that downtick. We still have 2 days. Kind of funny that would take us through Tuesday. But 2 days more to resolve that. Stochastics already on their way down. CCI tick up slightly, sideways on the RSI, getting a bearish cross on the MACD, very encouraging. Down on the MACD histogram, and unfortunately the 14-day RSI moving average ticking up. So, mixed picture. Now here's where it gets interesting, in my opinion. We already have a setup for a head and shoulders on the NASDAQ. Even if you were to take out this big red bar, we still have this high right here which exceeds the left shoulder, which is great. You can see the CCI rolling over, the RSI rolling over, the stochastics rolling over, the 14-day RSI moving average pointing down, and essentially a flat line in the MACD and the MACD histogram. So this is a really nice setup if we're going to get further downside, and if the NASDAQ does roll over, the potential for it taking the market with it is pretty darn good. And moving on to about oil. Now on Thursday night we were talking about oil, and we said that the problem that we had with oil was that it was in a position to bounce, and if it bounces it takes the market with it. It's exactly what happened. And so can we blame all of the market bounce on Friday on oil? No, but certainly it's a major helping hand. Now oil does not have an uptick on Friday, which is great. It's in a much better position to continue going to the downside now that it has relieved some of the stress. That's great for bears. 14-day RSI moving average still ticking down, still pointing down. Stochastics are mixed, slow pointing down, fast pointing up on the CCI, up on the RSI, up on the MACD histogram, and down on the MACD. Yes, a mixed picture, but not nearly as worrisome as it was on Thursday. And for fun, 60-minute time frame, we can see it got way far away from the long-term moving averages, turned around, came back up, kissed it, and the question now is, in the 60-minute time frame, is it going to be able to bust through the long-term moving averages and change its direction, or is it going to fail? You can see here in the past how it gets too far away, turns around, comes up. In this case, it penetrated and then failed. Very possible that we could have some penetration and then have it fail, or even bust out of it. Hopefully that won't be the case. You can see the 14-day RSI moving average curling up, but we can also see the MACD histogram is running out of steam. MACD ticking up. Stochastics high ready to turn over. Hopefully they will. CCI high, trying to turn over, and the RSI not so high, and also trying to turn over. So possibility of a failure here, absolutely possible. And the VIX, not a bad day for the VIX. Fat body spinning top. 14-day RSI moving average curling up. Stochastics mixed, fast pointing down, slow pointing up. Down on the CCI, up on the RSI. Up on the MACD, had that bullish cross a couple days ago, and up on the MACD histogram. Not bad. So an increase of this, definitely good for the bears. TNA. Almost a bearish engulfing, not quite. If we had a down tick target, it would have been met, but we don't. It was already met. 14-day RSI moving average ticking up. Stochastics rolling over, pointing down in a good way. Slightly up on the CCI, sideways on the RSI. MACD histogram sloping down, and the MACD itself hopefully will have a bearish cross. Not bad at all. And 60-minute time frame. Yep, we do not have the potential for a head and shoulders here. Just it's too close, and we're too far down. So that's okay. 14-day RSI moving average ticking up. Stochastics in a great position for going down to the bottom, along with the CCI, the RSI. The MACD histogram is rolling over, and the MACD is clicking down, looking for a bearish cross. Very, very nice. I like this a lot. And XLF, the financials, ending with a nice and pretty hanging man on Friday. 14 days still ticking up. Stochastics trying to go down, in a great position to do so. CCI ticking up, RSI ticking up, getting the bearish cross on the MACD. MACD histogram ticking down. Very nice overall. It is somewhat mixed, but still not bad at all. 60-minute time frame. We can see that that strength. Oh, you know what? This is I'm a little bit off here. It was just strong. It had the dip on Friday, and just melted up. Stochastics high, no sign of a turnover yet. CCI ticking up, RSI ticking down. 14-day RSI moving average going sideways at the end of the day. MACD still ticking up. MACD histogram still ticking up. So a little bit of further strength looks probable for Monday in the financials, but overall, not too bad. GE trying to get a better read on the Dow, and it ended with a little doji star here on Friday. 14 days still ticking up. Stochastics heading on down. CCI ticking up. RSI ticking sideways. MACD histogram ticking down. MACD itself ticking sideways. Not much to see. 60-minute time frame. Initial weakness, and then up, which is kind of interesting. But anyways, 14-day RSI moving average ticking up. Stochastics in a good position to roll over. CCI down, RSI down, MACD histogram down, MACD ticking up. And we have the previous peaks similar to the Dow and SPX, except there's 3 of them instead of 2. So, or in SPX's case, 1. So not too shabby. If it can break this high, that's not the end of the world. We still have 2 up here, and I would actually think it'd be more likely that it would break this one and then have problems with these 2. But just my feeling. And Apple closing below 600 again by a hair. Very interesting. Much closer to the downtick target that we've been watching for. Very, very, very close to it. 14-day RSI moving average ticking down, still very high, but look at that. The stochastics racing down, CCI down, RSI down, bearish cross on the MACD histogram down. Very nice. Very high probability that at least the downtick target will be met. 60-minute time frame. Total opposite of essentially everything else. A little bit of strength. This is what we were looking for in the Dow and SPX. Strength into the open in the early part of the day and then fall apart. And it happened on Apple, didn't happen on everything else, unfortunately. 14-day RSI moving average, moving down, still has room to move. Stochastics pointing down, CCI up, RSI down. MACD histogram slowly ticking up, MACD ticking down. Definitely bearish, but indications of definitely a good place for dippers to come in, at least to push it up a little bit. But I mean, it's Apple. Of course, there's going to be dippers that come in. UUP. The Bears want strength in this one. We're really close to the 200-day moving average, which should hopefully produce a bounce. Fat body spinning top. No uptick, unfortunately. 14-day RSI moving average ticking down. Not good for Bears. Stochastics trying to get underway. Not really. Sideways on the MACD histogram. Down on the MACD. Sideways on the RSI. Down on the CCI. So that test of the 200-day could happen very, very, very easily. A little kiss of it, maybe even peak below. Hopefully it will be able to maintain its position above. And the 60-minute time frame, gap down, good for the bulls. And slow melt up, which is kind of interesting that that didn't have too much of an effect on Friday. 14-day RSI moving average curling down at the end of the day. Stochastics trying to go on up on the CCI, up on the RSI, up on the MACD histogram, up on the MACD, looking for a bullish cross. So yes, a move up, definitely easy in the 60-minute time frame, and with the stochastics being where they are in the daily, not bad. Not great, but not bad. And FXE. Oh, this is nice. Ending with a hanging man on Friday. Not reaching the previous peak, and we have another peak before it, which should have some resistance. 14-day RSI moving average curling up, stochastics wanting to turn over but not really doing it yet. Up on the CCI, up on the RSI. Very, very, very slight on the MACD histogram and up on the MACD. Is it enough to say that it's going to roll over at this moment? No. But I do like that there's a hanging man. That does put a question mark on it. 60-minute time frame. Had its move up. Good for the bulls. And 14-day curling up. Stochastics trying to go down but not yet. Down on the CCI, down on the RSI, sloping down slightly on the MACD histogram, and the MACD itself barely up. So really mixed picture, have to wait and see, but certainly the possibility exists. Well, you can make a case in either direction. That's just the truth of it. GLD, the second VIX. We were down on the dollar, and we were up on fear. And so, green on gold. Not bad. 14-day RSI moving average ticking down, stochastics rolling over, going down, I should say. Up on the CCI, up on the RSI, up on the MACD histogram, slightly up on the MACD, looking for a bullish cross. And SLV. Not like gold. Red spinning top. 14-day RSI moving average ticking down, stochastics mixed, up on the CCI, up on the RSI, up on the MACD histogram, and essentially sideways on the MACD. And I'm not going to do the 60-minute on this one. Just not too much to see on this. And VXX. Little gravestone doji. No, nothing on the bottom. Not testing the previous floor. Good. Holding above 16. Also good. And we have 1 day to resolve this uptick target. I just don't see it happening. It'd be great if it did. Down on the 14-day RSI moving average, but trying to curl over. Mixed on stochastics, down on the CCI, up on the RSI, up on the MACD histogram, and slightly up on the MACD. Not bad. Certainly not like back here where we were just like, stay away from this. So much better. And I guess it just needed to work off some of its price. But let's see, is there anything that I'm missing? I don't think so. So that'll do it for the weekend update. As always, all investing decisions are your own. This chart video for entertainment, educational, and consumption of time purposes only. And hopefully going to see some bleed over and what we should have seen on Friday happen on Monday and Tuesday, with any luck. Have a great rest of the weekend.